All right, everybody. We're not late. It's 8:59. We're ahead of schedule. If you see the person on the right of the screen, it is not Amit. Amit had a business meeting tonight, and we called Matt, and Matt was gracious enough to bless us with his presence. How are you, Matt?
Steve, I've been waiting for a man like you.
I mean, I wouldn't say that too loud.
That's true. That's probably
People
not.
may get the wrong idea.
People might get the wrong idea.
People may get the wrong
I've
idea.
been waiting. Sorry.
This is how this night is going to go. Everybody, please read the disclaimer.
Please.
We are not financial advisors
or singers.
We have no idea what your situation is. Please take everything we say with a grain of salt. Do your own due diligence. With that being said, educational and entertainment purposes only. Please keep that in mind.
Emphasis on the entertainment.
Thank you, everybody, for being here. Lena, Chels, Rusty, PB, all the regulars, KKB. What is going on?
KGB? The KGB's here?
KKB.
All right.
We got a lot of Rusty's in the chat. What's going on? June's in the chat. What is going on, everyone? For those of you going to the meetup in LA, I will be there. For those of you going to the meetup in Chicago at the end of May, I think Maddie will be there.
End of May? Yeah, I don't see a reason why I wouldn't be.
And guess what? I'll be there too.
Steve, in Florida. Florida basketball? What is that? Florida football? What does that say?
Gator country, baby.
Steven, you haven't left the state of New York since the Obama administration. Why do you have a Florida football shirt?
Don't worry about it.
Okay.
Gainesville.
Is that why? Because of Gainesville?
Gainesville. Anyway.
Is that what you called the gym that you went to? Is Gainesville because you were getting the gains?
Oh, that was a good one, Matt.
No, that's a genuine question. Like, I don't know if that's what the joke is when you keep
but
Gainesville.
That would be an amazing name for a gym. We should just open a gym and call it that.
I mean, we talked about other things with respect to real estate earlier today. I don't know. We had to run it by the big boss, see what he thinks.
Well, we got a lot to talk about tonight, everyone. And PayPal is not one of them. Don't worry, Lena. I'm not going to bore you with PayPal again.
Again?
Well, I went on a tangent last night also about it.
Lord.
So, anyway, let's start with this. My father called me today. He's like, I think I'm going to buy more Amazon. He's like, I think I'm going to buy more Amazon. What do you think? I'm like, I think it's cheap here.
Papa F. Smart man. I like him.
Started looking at it again. I am slacking, everyone. I have about 8 articles in the pipeline I have to write.
8 more than I got, Steve.
If not more. And before we went live, Maddie asked me a question about deploying capital. I think Amazon is so beat up here. I think this market is really not making sense. And we're getting a rotation into safety because of all narratives that can't be proven or disproven. The facts of the matter are the S&P is at 6846. Okay. We are still hovering around all-time highs. It doesn't feel like that for many investors because many investors on the retail side are in companies like Palantir, Rocket Lab, Hood, Coinbase, SoFi, Amazon, Microsoft, things that are going down. Yet old world conglomerates are going up, flight to safety. I'm going to make an argument. Matt, I want you to steel man this if you can. When I think flight to safety, I'm not thinking Walmart. I'm not thinking Costco. I'm thinking Amazon should be a flight to safety over those two. Here's why. And then I want you to steel man it. All three sell consumer goods. One does not have in-person stores. The other two do. And there's a premise that because they sell groceries and people go there every week, it's durable revenue, durable profitability. What two of them do not have are, one, an Amazon Prime membership. Now, the Costco membership is great, but you don't get everything with a Costco membership that you get with a Prime membership. The movies, the books, the music, everything else. Neither of them have an AWS. Neither of them have an Audible. Neither of them have Twitch. Neither of them have any media whatsoever. So if I'm thinking flight to safety, I'm thinking Amazon because it's higher growth. It's going to be bigger than both of them on a revenue standpoint. I mean, it's bigger than Costco. It'll be bigger than Walmart next year. There's a wide moat around their durability. They could expand margins through AI and robotics. It's very hard for me to understand why those two are considered a flight to safety, but Amazon is not. And I would rather buy Amazon here than those two. What do you think, Matt?
Big fan of Amazon here. I was just going to ask people. Pose it back to you, Steve. You asked me to steel man it. I don't really know what that means. I'm not smart, so I'm off in the
I want you to blow up my thesis about why we would want to be buying Walmart or Costco here rather than Amazon.
Well, I'm not smart enough to come up with a counter thesis, but
see, you know what? I think you are.
I don't think so. What I can say is that it's being dragged down by a larger sentiment of people wanting to get out of Magnificent Seven stocks, and do I agree with it? Absolutely not. Let me ask a question, Steve. Do you think that from the past 3 months, the stock is down 20%? Can you believe that shit? From $250 to where it is at just under $200 today. Couldn't believe it. I literally just looked at it. It's the facts. Are people buying 20% less packages from Amazon than they were 3 months ago? I mean, if you average out, so you're going to get a text. I'm going to hear a little ding. Absolutely not. If you average out the fact that, of course, the fourth quarter is generally speaking higher revenue, right? But if you normalize it out from February to February, I guarantee that we are probably still up comparatively to where we were last year. We're definitely doing more AWS volume. Operating income is definitely doing way better, and margins are definitely doing way better in AWS than ever. So I 100% agree with you. I'm very surprised that the stock fell below $200. And I'm excited because I got paid early, Steve. And so with that, I have money in my account, and because it's going to be a long weekend, so anybody that's selling premium, right? Keep in mind, it's going to be a long weekend. I was able to switch my buys from the 17th to tomorrow. So I'm excited. I'm excited because there's a lot of stocks on sale today. Rocket Lab, Amazon, Palantir, a lot of things are on sale comparatively. How cheap? Obviously, I'd say Amazon is probably the best buy out of all three of those right now, but sometimes when you have the capital, you got to deploy it. But I'm 100% with you, Steve. I think it's very overblown. It says it right there under the news. Software sales way overblown.
I mean, let's just, before you finish that, this is the AWS CEO saying that software is the whole sell-off and the AI fear is overblown. That is the exact opposite of the narrative that is being pitched. And this is somebody who would probably know, and it goes back to my argument, that a lot of these narratives to the downside are formulated by people who have no fucking clue what they're talking about. But go on.
You heard it here first, Steve. I mean, that's pretty much it. I think that right now, with what's going on with Bitcoin, I mean, we talked about this 2 weeks ago on Amit's market close for the week, right ahead of the New York meetup, that I think people are getting risk off. And unfortunately, because of the nature that AWS is fitting in with high growth technology comparatively to the fact that they are now the largest retailer in the world by sales volume, I think they're just being thrown out with the bathwater. like a lot of the other technology stocks are. So I think that, as well as coupled with everybody getting very flustered as to where does the buck stop with being free cash flow negative. This isn't something we've had to deal with in quite some time. Um, Obviously, we think we saw some of this in 2021, 2022, maybe a little bit with Amazon when they were trying to take advantage of the fact that they went from about 11%. The whole nation of the United States went from an 11% of total sales being e-commerce to over almost 20% within the matter of a couple quarters. Amazon took advantage of that by trying to put in $60 billion worth of CapEx, I believe, in 2021. They came back off of that in 2022 and focused on operations margins that obviously has played very favorable for them over the past several years. But now I see that they're trying to take advantage of this data center flow. I think that people are cautious and trying to be cautious as to, do they want to jump both feet in the pool with, let's just say, a Google trying to spend over 150 billion, an Amazon trying to spend however much they're trying to spend, collectively over 600 billion, and we haven't even gotten to Nvidia yet on how much capex they're trying to spend. So I don't know. I think that people are just being cautious. I'm less afraid of the capex number than I was in the past, just based off of the income growth that I'm seeing out of a lot of these companies. What I will say is I still am kind of not an entire both feet in the pool yet either, because of the fact that we have yet to really see some of these large data centers truly open up. And we're spending billions upon billions. And also, you're starting to see pushback from local governments about power usage, cost of power, all that. So it's an interesting time to be alive right now, but I would hate to be a bettor against the United States stock market.
So I'm going to talk a little crap about the street for a sec.
Give us some crap, Steve.
And maybe not the street, maybe retail, maybe just investors in general, maybe just analysts. I don't know. But I want you to read something because I'm not that smart. Okay?
Steve, don't. Can't take my words.
I'm stealing your words. All right? Because I'm not that smart. I want you to read this for me.
You're devilishly good looking.
Okay? Hold on. Read this to me.
Oh!
What does that say?
If my calculations are correct, the operating income is expected to be between 21 billion and 26 billion, compared with 21.2 billion in the fourth quarter of 2024.
Okay, that is, what is this for?
Fourth quarter 2025 guidance.
Okay, so Amazon, the management team at Amazon told us that, once again, Matt, what was the range?
21 and 26 billion.
Okay. Okay. So read this. What's highlighted right here, Matt?
I don't know. It's out of focus. Operating income increased to 25 billion in the fourth quarter, compared to 21.2.
Is 25 billion closer to 21.5 or 26?
26.
Okay. Is it above the midpoint of that range?
I don't know. I'm not smart. I'm getting lost in what you're trying to explain.
No, I mean, I'm not that smart either. So I want to know if 25 is ahead of the midpoint between 21.5 and 26.
Steve, I believe you're correct.
The last time I checked, it is. And Amazon got punished because the analysts weren't happy with that freaking profitability because EPS missed by 1 penny. I mean, give me a freaking break. This is the same shit that happened in 23 when I lost my shit in the Seeking Alpha article about this. You know, the company gives guidance. Now, whether anybody agrees or is annoyed that they give a wide range, this is what Amazon guided for. They're the ones that know the business the best, not people covering it, not me, not anybody else. Amazon did what they said they were going to do. They came in within the range. They came in above the midpoint. AWS reaccelerated. And it got taken down because of two things. One, they didn't like that they missed by a penny. And two, people are questioning the 200 billion of CapEx. Now, here's something everybody needs to remember.
Let us remember, Steve.
Amazon, unlike the other companies, has to freaking backstop the world's greatest logistical network behind the DoD. Okay. Some would argue Amazon may even have a better logistical network than the DoD. I'm not one of those people. That is why I say is the second best, right behind the DoD. Now, Amazon has to spend so much money on everything for that logistical network and keeping up with everybody else on cloud infrastructure. Did you really think they weren't coming out over the top of everybody else? They report last. They could have had 175 and say, you know what, Alphabet did 180, we're just going to do 200. And you know what? They can. These companies are in a prisoner's dilemma, and I doubt that all four of the hyperscalers would be deploying this much CapEx out there if there was not a forward ROI to be had. Not all of them can be wrong. Now, if it was one going off the reservation, that's one thing. But that is not what's happening here. And when Microsoft reports full year in July, they're probably coming over the top also.
Steve, I don't think you're bullish enough.
I think that this is just crazy. And look, Amazon can go lower. The market can last for a long time being irrational. And maybe people are not happy about the negative free cash flow. The question is, if the market is forward-looking, because that's what everybody tries to say. The market's forward-looking, the market's forward-looking. Why aren't we being forward-looking about what this $200 billion of CapEx is going to yield in profitability over the next 3 to 5 years?
What do you think the return on capital invested for these large data centers will be, Steve? Do you think they'll be in the 30%, 40%?
You know, it's hard because we don't have a broken out by segment of every data point to actually calculate that.
I know.
But look, let's look at three of them. Amazon may not be the best example. Alphabet or Microsoft is probably a better example, only because we all know consumer products is a low margin business. Be that as it may, Amazon's cash from operations continues to increase. In 22, it was 46.5 billion. Then it almost doubled and went to 85. Then it went to 116, and then it went to 140. Okay. They're getting a big return. Now, they're increasing their CapEx, but at some point that will teeter off. If we go to Alphabet, which is probably a cleaner example, anybody saying that the CapEx deployment is not warranted, Amazon has gone from 31.5 in 22 to 32 to 52 to 91. Well, let's look at that cash from operations. Oh, 91.5 billion to 164.5 billion. Like, you don't get that type of increase year over year every year without reinvesting in yourself. And if they were able to do that, think about this, okay? 91, 52, 32, and 31 is roughly 220 billion, give or take. If they increase cash from operations by, call it 70 billion, by spending 220 billion over the past 4 years, what do you think deploying 200 billion this year is going to do to them in cash from operations over the next 2 years with growth?
I will say there's likely to be slippage.
Sure, some.
Yeah, for sure. But I agree with what you're stating. I mean, can you expect a 30% increase, even if they get a 20% increase, Steve?
Exactly.
$40 billion.
Yeah. I mean, you look at these numbers, you don't get to these numbers, and this is billions. You don't get to these numbers without having a gigantic moat, knowing what the hell you're doing, being the best at what you do, and having the capital to reinvent yourself and deploy back into the business. This is only going to go up. Look, Alphabet is not spending $200 billion if they think this is going down. How about that?
With there, Steve. With there.
So, I mean, look, everybody knows I'm a Super Bowl. I'm a Super Bowl because of the numbers on these companies. There are companies I think are overvalued. But when it comes to these companies, I think that this is an opportunity. Maybe it's not an opportunity for tomorrow. Maybe it's not an opportunity for next month. But long term, these are opportunities.
Steve, did you see the news?
Which news?
That I'll share it on my screen here really quick. Just make sure I'm not sharing anything proprietary. Nope, I'm good.
I'm sharing this?
Yes.
Oh, well, I didn't realize we were moving into crypto winter so soon, but let's do it.
Did you see who retweeted it, Steve?
I did not. Oh, Thomas Lee, not the drummer.
Not the drummer.
Not the drummer.
So yeah, moral of the story is people like Uncle Matty Moolah moving into BM&R.
You know what? The fact that Matty Money just started a position in BM&R, I am buying more tomorrow.
Steve, I don't. Now that I'm half a foot in the pool.
Yeah.
What's your cost basis, if you don't mind me asking?
It's high.
Okay. So I want to explain to people, right?
Yeah.
So I'm not trying to be a dickhead, right? By no means did I ever try to, throw shade or anything. So when I state what I stated in this tweet, I'm not trying to throw shade on anybody by any means. I'm not trying to take a victory lap or anything like that. But I was very cautious about entering a BM&R. I actually have stated for quite some time that I actually really like the idea of it and the product of it. I'm also a long-term bull on MicroStrategy. I don't have a position in MicroStrategy, but I believe what is going on with these treasury companies is something that will eventually be phenomenal for long-term shareholders. But I think they should exercise caution because it is still cryptocurrency. So I've been very much a believer that crypto winter is something for the past year that was going to happen at the end of 25, early 26. And I believe now, if anybody has the time and has yet to enter BM&R, could be a good opportunity. I think that with the amount of crypto that BM&R has on, more specifically Ethereum, on their balance sheet, coupled with being able to stake, I don't think it showed up well in the fourth quarter because I don't think that they were staking as of yet. But I believe that one of two things is going to happen. This thing's actually probably going to run in the first half of 26, not substantially. I'm not saying it's going to double. I'm not going to say it's going to get back to 45, but I think that there will be a buzz when they report in probably the April-May timeframe based off the fact that they are starting to stake and they're going to see income from that. What they do with that, I would hope that they continue to get up to their 5% goal of Ethereum. But I think in the long term, as crypto winter comes to a conclusion towards the end of 27 and in the beginning of 28, we start to see the next rise in cycle. I think this is going to be a great opportunity to hold. Now, I still hold under the belief of, because I want to reiterate this, something I stated basically last week or maybe earlier this week, I forget. I still think this is a long wavelength. You just heard me say the end of 27, early 28, before we really start to see the cycle increase again. I would prioritize personally other items. So if we see a large drawdown in equities or something like that, I personally would focus on those before focusing on this, because you'll have 12 to 18 months. Who knows if the rest of, and I think this is probably trickling out through the market. This is probably why some of the technology stocks people are getting less risk on. etc. But I think it's likely to be short-lived for equities versus companies like that are associated with crypto might feel this for a lot longer. I'm prioritizing equities over crypto, but I am starting to dip my toes in, and I'm excited to see what else kind of comes and hits the fan. I would love to get some private investments. One of the things I've been looking at for private investments is Kraken. I was hoping that they did an IPO. People were speculating that they were going to IPO in the first quarter of this year. I'm anticipating they're going to hold off due to the current environment. I hope they do another round. If they do another round private, I want to be involved. But yeah, so I think it's an opportunity for people that haven't dipped their toes yet. Take another look. A lot of exuberance has been removed from the market. I think crypto winter is in full flight. Do I still think that there's a big spike down at some point? 100%. But you can't make those guarantees. What you can guarantee is we're down 50% from the highs today. And I think this is a great asset, and I like Tom Lee long term. So long BM&R, as I have been, but now I'm actually in it. Steve, thoughts? You're on mute.
Let's be very clear. Tom Lee, not the drummer.
Not the drummer, Steve.
Not the drummer.
Although
not
I have
that one of our friends would know who the drummer is.
But. I have seen Tom Lee, the drummer.
I mean, Tom Lee, the drummer, was the man.
What do you mean was the man?
Still is the man? I don't know.
Okay, I was about to say, I was like, did he die? And I didn't know. Okay.
I'm just saying, like, Motley Crue is amazing.
It was insane. He was fucking drumming upside down, Steve. I don't think you understand.
Same old situation. You think I don't know?
Same old situation.
Come on.
I was like, wait a second. Is he really going to do this? He just starts fucking climbing up out and upside down.
Insanity.
It was crazy.
It was great. So
people dressed up for that concert, by the way. It was insane. It was phenomenal.
So two things. One, before we get into the crypto winter, I want to show two things.
Show it to me, Steve.
All right. First, everybody, I love the memes. Keep them coming. It's hilarious. Now, first, the Ric Flair thing is amazing. Okay? Love it. You know, I know it's even more amazing. The philosophical investor struck again. Are you ready?
If it's the one I saw before I made my drive home, then
I did not see this until right now. It's 10 p.m. at the AI party that goes until 4 a.m. This is fucking heroic.
I don't know how else to say that he can't keep getting away with this.
I don't know how you're getting Gemini to get it this freaking good.
My prompts are good. This gentleman, I'm going to start paying him for tips. Like,
oh my God.
He gave me the workaround, right? Because, you know, like 2 weeks ago, I was like, I can't get thumbnails, whatever. So he gave me the workaround. But I need tips from this guy. How descriptive is he? Because I write like 5 or 6 sentences to get what I get. This guy must be writing novels. The fine-tooth details that are going on in this.
Is it over the top that I want to get this as a print for behind me?
I think you should send it to Dan Ives.
I mean, we're going to have to send this. Oh, he tagged Dan Ives in it.
That's perfect.
I mean, this is so amazing. Keep this shit coming. That's all I got.
Chianti? What do we got on the table, Steve?
Got a bottle of wine.
Why does it look like Dan's drinking? Dan looks like he's drinking some spirits, though, not some wine.
Yeah, you are right. It looks like Dan is drinking some scotch or some bourbon with that pipe.
It could be a dessert wine. I've seen dessert wines look like that.
Could be. Could be the way the light's hitting it. But this
Amit's haircut is current. People are noting in the chat.
Amit's haircut is current. I don't know that Amit would be wearing a smoking jacket, but I think it looks great on him. I may buy him a smoking jacket.
I think Amit needs to lean into the smoking jacket more.
I wouldn't hate it if Amit started dressing like this. I wouldn't hate it.
He's dressed like a cobbler.
I mean, philosophical investor, hats off, amazing, love it, love
Did you
it.
see the other one?
Which other one?
He did another one with like a UFC fight.
No, I need to see this.
You were in that one as well.
I need to see it.
No, I was not talking about Kraken Robotics. It was a Kraken, the firm, the crypto firm. I'd assume go to Philosophical Investor and look at his photos.
These prompts are killer. Absolutely killer. I love it. What are we looking for on his account? How does the philosophical investor only have 690 followers? Can people please follow this person?
I don't understand how that's plausible. He should be greater than us.
This guy should have, or a woman should have, hundreds of thousands of followers.
It is a gentleman, but we can keep them anonymous if they want to be.
Amazing. Anyway.
So it might be a female.
Let's get back to it. So
Steve, all right, I'll look for it, Steve.
BMNR, Beast Holdings just is buying a fintech company, and he's going to make a Beast financial channel on YouTube. Did you see this?
I did not.
I'm excited because you know what? This may actually get a lot of young kids interested in finance. And if they do it right, this is going to be a huge net positive.
Like, why are you beating my ass, though?
I don't know.
Check out the shorts, though.
Wait, oh my God, that's crazy. He put the White House quant thing on your shorts?
Yeah.
And he's got a milk jug on mine.
I kind of look like Roy. Except not nearly as good looking as Roy.
Why is Amit dressed like a pimp?
I mean, kidding.
Oh God.
I could see Amit with some baby powder.
Listen.
What kind of watch is Amit wearing? Zoom in on that, Steve. Oh wait, I'm the one that's. I can't.
Philosophical investor strikes again. That's all there is to it.
Always does.
So Beast Industries is buying a fintech or buying some type of fintech, and they're doing a new channel. I'm all for it. The real question is, are we going to look back at this in 5 years from now and be like, Tom Lee was so right about investing in Beast Industries?
I don't know if did I say this to you, Steve, or maybe I said this to I mean, I'm looking at what Robinhood is doing with the Trump accounts. Remove the politics out of it, but getting investors in as early as possible and harboring that to basically get involved in the next generation of investors. And what is going on with Mr. Beast? I don't know a lot of people that are my age, 30s, early 30s that really watch Mr. Beast. I've watched one or two of his things that were pretty good, but I'm not like an avid watcher. But somebody's watching. I mean, the guy's literally got 1 billion followers at this point. So if you ask me, I think it's genius to tap into that next tranche of investor as early as possible. It, to me, explains and shows that these guys are focusing on long-term cash flows. And as we know, stock price is in the short term potentially about hype, but in the long term, it's about how much long-term distributable cash flow will the companies be able to have, which is why I'm bullish on Amazon, right? I mean, let's just get it, clear. I've never been, the fact that you just showed the past 3 years where ops income has basically tripled or quadrupled, but yet the stock has remained relatively flat is hysterical to me. And this is why I continue to buy more and more. But anyway, I just think that it just goes to show the forward thinking, and it could go belly up, But to me, it's the forward thinking that was, I don't want to say too expensive to get involved in, and to me, it means that there's likely to be more deals to happen that are also forward thinking. So it just, once you start thinking about it, it's an $8-9 billion company right now, BM&R specifically, and if they're generating 300 million in EBITDA, strictly from Ethereum, and they're not even fully sized up yet in terms of their total Ethereum input. Who's to say? What are they going to do with all that money? They're either going to distribute it back to shareholders in some way, shape, or form, or invest in great opportunities. And to me, I think it's good to be at a depressed cost basis like I am going into 2028, and I'm very curious to see what they do.
I do have a high cost basis on it, and I've slowly been buying more, but now that it's under 20, I think I'm really going to make a dent in that cost basis. I think it's down to, I don't like giving bad numbers. I don't know. If I had to guess, it's probably 41, 42, that area.
Let me ask. I mean,
Here's the thing. I'm not losing sleep. Like, that's the biggest thing. Like, does it suck being down money? Yeah. But does it impact my life? No.
Well, let me ask as well, like how big of a position was it? I mean, you don't have to say, but was it pretty big, or was it?
What do you consider big on a percentage basis of a portfolio?
That's for you to disclose. I mean, I don't
No,
know.
I'm just saying, like, I don't know what you consider big.
I mean, it's obviously not
Look,
Amazon in your portfolio.
it was enough money where you feel it.
Okay.
I don't know if it's necessarily big, not big, but you feel it.
Okay.
It wasn't 100 shares.
Yeah. Okay. But I mean, to me, it's like if you actually wanted it to be a substantial position in your portfolio, and this is hypothetical, I'm not saying do this, right? I'm just shooting the shit. I think that if you were to want to make it almost the size of, say, an NVIDIA, you'd be able to get that cost basis down into the mid to low 20s.
Well, yeah, I do not want it to be the size of NVIDIA. Let's be very clear on that.
I'm not saying time's on your side.
But I do want more. And I bought it knowing that I have no clue what's going to happen. And the chart for Ethereum looked very scary. And I knew that Ethereum could go down significantly, just like it has previously. So I don't regret it. I am going to buy more and try to get the cost basis down to around 28 to 32 level, that area. That's going to be the goal. And there's a couple of companies I'm doing that on. Long term, I think this is fine.
What other companies, Steve, if you don't mind me asking?
I will be buying more Zeta tomorrow.
Oh, hell yeah. What's it down to?
15-ish.
Bro, really?
Yeah. It was so undervalued here, and I do not care them down 20%. I know I can't pick bottoms. I know I can't pick tops. That is not my strong suit. My strong suit is doing the fundamental research and figuring out if they're going to be able to grow in the future. Now, I'm not necessarily a growth investor. I truly go off the numbers, and this reminds me of a baby SoFi or a baby Palantir.
So he says, I'm so bullish on BM&R, I'm starting to grow horns.
So
is that the shadow government?
I am being told it was as low as 14.
Zeta?
Yeah.
I mean, the fact that you have the shadow government also keeping an eye
so
means that the Fiorillo family is bullish.
Look, here's the numbers on Zeta that make sense to me, okay? When we look at, let's start off like this.
1498.
1498. So Matt, look at the revenue growth. 591, 728, a bill, and then in the trailing 12, 1.22. This will probably be 1.3 or so.
Not enough.
All right. It's a $4 billion company. Market cap. 4 billion.
Look at that gross profit. Jesus.
Maybe just under. Huge gross profit. All right. Here's the best part. They just flipped operating income. Who does that remind you of?
A lot of good companies.
A lot of good companies started out losing money and then growing and becoming profitable. And then we look at net income. It's not profitable yet on an annualized basis. It will be in 26 most likely. And then EBITDA, we just got back to positive EBITDA after several years of a true build out. Now, do we think that this is going to reverse? I don't. I've listened to a bunch of the stuff Zeta's been putting out heading into earnings. We can go to their page and also their CEO's page and listen to some of that stuff that's on X. It sounds so bullish. And then we look at the balance sheet, 385 million in cash, 197 in debt. Cash rich company. Low as hell flow to 240 million shares. And then we go to the cash flow statement. They're free cash flow positive. They've been free cash flow positive for quite some time. That reminds me of Palantir.
Yeah.
Now, maybe they don't have the growth rates that Palantir has, but check this out. The analyst community, which usually gets it wrong with the numbers because companies traditionally exceed them, they have this accelerating revenue in 26 to 34.5%.
Where's so it's a lot of their issues with depreciation. Like, where's the? I'm trying to understand. I mean, you're showing the 150 million in ops cash, but the net income is just getting to profitability. So I'm kind of curious where the difference between the two is. Is it just depreciation or
so
share-based compensation? Or?
The big thing is what's in their other operating expenses, which I actually don't know. I can't tell you what it is, but they have huge charges on that line. It's in the selling. It's in the SG&A, and it's been growing out. So
sounds like you need to do some research on what's in that other operating expenses.
Yeah. I mean, look, the reality is that a lot of great companies started like this. And when I look at it on a non-GAAP basis, like the analysts are doing, it's trading at 24 times. I guess they're expecting a big beat in Q4. But if we look at 26, it's trading at 16 and a half times non-GAAP. A lot of companies are pegged to non-GAAP. So I do think there's a big opportunity here. And it goes back to, okay, the market cap is just under 4 billion. Tell me this can't get to 12 or 20. I mean, Tanner was talking about Figma last time. Like, the numbers suck on Figma. Look at where Figma is. They're an $11.1 billion company. Okay, 11.1. They don't even do $1 billion in revenue. Zeta does more. Operating income losing $1 billion. Net income losing 926 million. We go to free cash flow. They are free cash flow positive, but not nearly enough to justify a $11 billion valuation. So if a company like Figma can catch a bid, even though it's been a falling knife with those types of numbers, you're telling me that a company like Zeta that's actually growing profitably and is about to flip net income and just flipped operating income is a $4 billion company? I mean, I do think that this can get anywhere from 12 to 20 in the next 2 years, which is a 3 to 4x. Actually, 3 to 5x.
Interesting thought. Can we talk about an $8 billion company, Steven?
An $8 billion company. An $8 billion company. I know it's not Rocket Lab. So is it Dutch Bros?
Did you see my thumbnail, Steve?
Which thumbnail? No, I didn't see your thumbnail. You were in the thing quick before me. You know that I just got to the computer. I was at the gym.
Steve.
Matt.
You inspire me.
I've gone to the gym 4 out of the past 5 days.
You're an animal. And how's your writing? Are you keeping up with that?
I may have banged out an article today.
Steve, you're a role model.
I mean, trying to be, man.
You're a model citizen. Are you ready for this thumbnail?
Whoa. Look at that.
Maddie's a broista.
You know what? I'd buy a coffee from you.
Steve, you mean that?
I'd buy a coffee from you.
I appreciate that. I wish I could franchise. I'd own a couple of these goddamn things. Steve, I'm curious if you could. I'm curious because you're the Seeking Alpha whiz, right?
I'm not, but go on.
What do you think? I wonder if they
Dutch
have it up
Bros?
already.
I haven't looked at it today. I see it's up 12.5% after hours.
Somebody likes it.
So Dutch Bros targets 2,029 shops by 2029. 26 revenue outlook reaches $2 billion amid accelerated expansion. Non-GAAP EPS of 17 cents, beat by 7 cents. Revenue of 443 million, beats by 18.75 million. I mean, good numbers.
The EPS is tough though, because when you start thinking about EPS, that means you're talking about earnings, and because Dutch Bros has, as we've talked about in the past, like when you're dealing with a lot of this infrastructure build out, or you're dealing with, in this particular case, restaurant build out, there's a lot of depreciation associated with that.
Yeah.
Now they don't own, let's just say, the buildings themselves, but they're built to suit, and so they have to put in millions of dollars into these storefronts. Well, the thing that's impressive is their annualized unit volume is continuing to grow. It's gone from 1.8 over the past several years to now over 2.1 million per store. So you start to think about it, and I know this is going to be off because not all the stores are company operated, but let's just say you have 2,000 company stores at 2.1 million per store. That's $4.2 billion in sales. And generally speaking, they're making like 25 to 30%. Not ops cash, but margin, pretty much ops margin on each of those stores. So I mean, you're talking about I'm not smart there, Steve, but let's just say it's 20%. I mean, you're talking about $800 million worth of potential EBITDA coming from the company in the next couple of years, and it's an $8 billion company today. So the eventual goal for this company is to double that. So you're talking potentially, on the low end, let's just say they do get to that 4,000 store mark. You're talking, if they're able to keep that 2 million, talking about 8 billion in revenue. You're talking about close to $2 billion worth of EBITDA, and you're only at an $8 billion company, $9 billion company. If it was me looking at this, what do you put on a multiple of EBITDA? Is it worth 15 billion? Is it, and especially when you think about the quality of the company, I wouldn't be surprised eventually it's a $30 billion company. And so at what time frame, I guess, it remains to be seen. They put in 150 stores. They're going to put in 180 next year. I'm curious where they end up in the following year, because they have to accelerate to get to that 2029 by 2029 target. But impressive shit. And the reason why they choked back, they were originally building 180 stores a year. They've choked back because they wanted to be cash flow kind of neutral. But the fact that their EBITDA is growing means they have more CapEx to spend. And if that continues to grow, they might be growing 250 stores a year here pretty soon. You think about it, every store is $2 million to the top line. My only curiosity though, they obviously did extremely well as they expanded into Texas. They then have now continued into Florida. They're now continuing into the Carolinas. They have yet, Steve, to cross over from Ohio into Pennsylvania. I'm very curious once they reach Dunkin' and Starbucks territory. Well, they're in Starbucks territory here in Texas too, but once they reach Dunkin' territory in the Northeast, I'm curious what kind of competition shows up. And also, a lot of these Northeast cities, the downtown areas are not conducive to how Dutch Bros operates. Right, they're very much like less than 1,000 square feet sort of stores, drive through mostly, walk up windows. So there's no seating areas like you do for Starbucks. So I'm curious to see how that adapts as they make themselves go into the Northeast. But I wouldn't be surprised in the next 5 years. You're talking about Mexico. You're talking about Canada. You're talking about potentially international expansion beyond North America. And where does that then stop? So to me, I think 4,000 stores is in the long-term plan. And to me, if it's 4,000 stores, you're talking about potentially 25, 30 billion-dollar company.
Well, they need to get this acceleration going because I still haven't had Dutch Bros and I would like to. So they need to get their stores into New York. Do they have any in LA? Can't hear you.
Steve might need to go.
If they have them in LA, I will try to go while I'm at. Oh my God. All right, Dougie, June, whoever's in the chat that's going to be in LA, do not let me forget this. We must go to In-N-Out. I've never had In-N-Out before.
Oh man,
I want to know what the hell this is about.
Is Tevis going to LA?
I don't think so.
Tevis is an In-N-Out kind of guy. So, and I love June, but I don't think June would be able to order the right In-N-Out burger. Maybe Doug can, because Doug is
hold on.
Is an experienced
I'm judging
man.
it on just a freaking hamburger. Okay.
Cheeseburger, right? Not hamburger.
No. Hamburger.
Don't do that.
Oh, I'm doing that. You don't put cheese on red meat. You put cheese on chicken.
Stop, Steve.
No, I won't.
How have I never?
No. No cheese on red meat, Matt. Sacrilegious. Red meat don't need cheese if it's good. You put cheese on steak?
Sometimes I put blue cheese on steak.
You get a nice filet or a nice ribeye or a porterhouse, you put cheese on it?
I like the little blue cheese crumbles on it.
Well,
you don't
like blue cheese crumbles? That's why you're wearing navy and I'm wearing just royal blue.
From Gainesville?
We can both be right.
Is Gainesville the name of your home gym?
You know what? I don't think so because I'm a little old for Gaines unless I go on something. And I'm not going on anything.
So. You're not pulled a Jeff?
No, I mean, listen. Well, you want to know what's funny? I guess some people have heard me say that. 2 people came up to me at the freaking meetup and said, we can get you whatever you want. One of them was a legit chemist, scientist. I didn't ask him where he works. Like, oh yeah, he starts talking about all these different peptides about what I should take. I'm like, I'm not even going to ask you to get it for me. Like, I'm so tempted, but I can't do it. It was hilarious. And then another one was a physician that was talking to me about it.
But getting you, where do you want to go?
I mean, they were telling me all the compounds I should take.
Nobody told me. I mean, Gene and I had some good conversations, but he was talking about it from like a recovery standpoint, not like a juice or, But I guess if it's peptides, it's natural. I guess it just releases hormones and stuff in your body, right? I don't know what it does.
Yeah, I mean, it wouldn't suck. Definitely wouldn't suck. Look at Bezos. Definitely doesn't suck.
I was a pretty scary dude when I was lifting and taking creatine.
See, I was never on creatine. Only protein.
It just fills your muscles with water.
So I've read a couple of the new studies about it. And there are people saying that taking 20 grams of creatine a day is the best thing you can do. And I'm like, 20 freaking grams of creatine. That's a lot of creatine. Like
Wow.
a lot. The serving used to be what, 5 grams you were supposed to take?
I thought so.
20 grams a day. And I think it became popular. Rory McIlroy, the pro golfer, takes 20 grams a day.
Jesus.
It's a lot.
Well, then if you're just in it for the hamburger, maybe June is your
I mean, I'm going to judge it on a hamburger, man.
June's your quant when it comes to In-N-Out.
I mean, I'm good with putting, some onions on it. That's fine. Ketchup, obviously, that's a must. But I can't
Grilled onions or regular onions?
either or. Surprise me. I don't care. I don't discriminate.
Oh, so on a burger, I like the crispness of fresh onions.
Yeah, I mean, they're both good.
I'm not going to complain with both. Yeah, but
Yeah,
I think I prefer that crunch. That's kind of why I also like a little lettuce on my.
Now I want to freaking order a burger. Jesus.
I mean, you know what you can do, Steve, and I've done this before. Is because as you guys know, I'm on my journey. I'm not perfect, but but you can order Wendy's patties just with the patties.
I've heard this.
And I've done it before, and it's delicious. They know exactly what you're talking about when you go to the drive-thru.
And by the way, Chris Camillo, you know what he just said? While we were live, there will be a moment when the worst of this manic AI disruption fear fades, or at least rationalizes, and 1 or 2 big buys trigger a flip in sentiment on Amazon. The market cap swing will be epic.
Eventually, Amazon will have their Google moment.
I agree 100% with that.
There's a reason why I'm not adding Google here. I'm bullish on Google. I think in 5-10 years it's still cheap. So in retrospect, but like the way I'm looking at it is I'm adding 2 to 3 times as much on Amazon than I am on any stock right now, other than the S&P 500. If it got back to where Google and Amazon were kind of fairly valued compared to one another, I'd go back to like a normal weighting. But I just think comparatively, it's a no-brainer. Is it the best buy? No, but it's the most obvious one to me. And in a risk-rated return basis.
I mean, it's not more obvious than this.
Dude, see, this is what I'm saying. The Gen Z, Gen Alpha.
I'm telling you, this could be huge for BMNR. Huge.
How much does BitMine own?
They put 200 million into it. I don't know the valuation.
What do you think of Jimmy?
I've never really watched his stuff, but you know what? I support this. I support the financial education of the younger generation, and I'm so happy that he is doing this. My only request is that they do it right.
Mm-hmm.
And they talk about Roths, they talk about saving for retirement, and make it fun. Like, I didn't have that when I was a kid. There was none of that. And you need to make it fun for kids and get them excited about it because it is something that will last them a lifetime. I am all for it.
Mm-hmm.
If I had way more money, I would have done some type of match to the Trump accounts.
You would have what? Matt, what do you mean?
So you know how Michael Dell did a huge thing for the Trump accounts? Like if I had a lot more money, I would have done something like that. Really, okay. I think it's one of the greatest things. Yeah. I do. Because
I really think the Trump accounts are great.
And I wish they weren't called Trump accounts, but it is so good because all these children will own a piece of America from day one. It'll make them bullish on the U.S. economy. It'll make them a fan of capitalism, and it'll give them a reason to follow the capital markets, and it'll set them up for the rest of their lives. you cannot do a better thing than investing for your kids, getting them interested in this, and just putting them in the S&P.
No, I agree wholly, and I hope there is a rebranding as well, because the last thing I want is to people to um, be turned off on it because of the fear of the orange man. And I'm not trying to take a side on either way, but I would hate for an opportunity for people, young people especially, to potentially prosper and learn a very valuable lesson on how to take control of your own individual investing journey because of politics.
Well, and that's my fear. That's why I wish it was the Invest in America accounts.
Yeah, I think that's a brilliant name. So maybe by 4 years down the road, maybe it's going to be renamed, and because until when? It's until the end of 27. I forget when the.
I don't remember when.
Yeah.
I just wish it wasn't called Trump account because it's so polarizing.
Yeah, exactly. But I've seen so many people, and I'll talk about Jimmy for a second. I mean, I call Jimmy. I should call Mr. Beast. I don't know him enough to, address him by his first name. But I think a lot of what he's done, I think the reason why he gets so much hate is because he has such a presence, and I think that scares conventional media. And so I think that you see a lot of people coming out and trying to push back on it, but I think that he has a genuine heart, and he's just trying to help people. So I think it's interesting.
I'm all for it.
What else we buying, Steve?
So I started running the numbers, and look, I'm not going to talk about PayPal. Don't worry about it. Not those numbers, even though it's looking even more interesting today. But this whole AI disruption of SaaS is getting overdone. It's so overdone right now. It doesn't make any sense to me. I'm going to show you something.
Show me, Steve.
This is so crazy. Oh my God. Let me. All right.
Steve's been waiting for a girl like you.
You need to make a Christmas album, Matt.
Here comes Stephen Claus. Here comes Stephen Claus.
I don't know enough about Adobe. Okay. But I know a lot about CRM. And trading it 10.5 times forward is ridiculous. Like these companies, Adobe and Salesforce, are trading at the same levels that tobacco companies are trading at a year and a half ago. At what point do we say enough is enough? And here's the thing. Do we really think these things are going to trade 5 times forward and 8 times current year earnings? Like, what's next? They're going to trade 3 times current year earnings? Because that's a trajectory that these things are on. I mean, does this not look crazy to you?
It's insane. So which one are you buying?
I mean, the most recent one I bought was ServiceNow. I started a position in it.
ServiceNow?
And I'm probably going to have to add more Salesforce at these levels. I mean, the street is not, but here's the biggest problem. How can AI disrupt AI, right? So everybody's lumping Microsoft in because they're saying it's software. But last time I checked, Microsoft wins if AI wins. A large portion of their business focuses around AI. The street obviously is not buying this bullshit. because these are all the street's numbers. If the street really thought that Salesforce was getting disrupted, would they still have Salesforce generating $14.98 of EPS next year and $17.61 in 28? Or would they have those numbers going down? Like, if the street's not revising the numbers lower on EPS, why should we believe that SaaS is dead?
Do you think Microsoft continues to go down from here, Steve?
I think it found a bottom. I think Microsoft found a bottom. I think I bought my last shares at $3.99 or so. I think it found a bottom. I think it's overdone. To me, Microsoft should be a $600 stock.
Yeah, I agree.
It has $1 trillion less market cap than Apple and generates more profitability across the line except for free cash flow because of how much they deploy to CapEx.
Was that Tanner yesterday or the day before? He said when he's selling Apple? Or was that Tevis?
Tevis.
When he's selling
Tevis
Apple?
hates Apple.
Hey, I get it. I mean, I back in 2015, 16, 17, whatever it was, maybe it was 2018. It was trading at like a 12x price to earnings. So I've been wrong on Apple, obviously. But he had Buffett sell it, so he's still so bullish on it. If Uncle Warren sold it.
I mean, look, I keep hitting the wire for my mic and it keeps muting. I don't know why. But I'm a big fan of Microsoft here. I think it's very undervalued, but I also think that this whole SaaS thing is overdone. And I think that we're in a situation where there's a lot of noise from people who don't know what they're talking about. There's opportunities, and it could get worse. And the problem with this is nothing can be proven or disproven. And every other week, you could have a new AI narrative that people get spooked about SaaS. So I don't know when this is going to end. I really don't.
The thing that bothers me a little bit is you're seeing, and I think that they talked about this a bit. I think it was on Dumb Money, or maybe it was Compound. I don't remember, but they talked pretty extensively about obviously SaaS being hit. That's what we're talking about. But the lack of actually following through with the numbers, if that makes sense. So Adobe is down substantially, like compared to, but its revenue, as you showed, is still growing north of 20%. And same thing with Salesforce. Salesforce is growing north of 30 something percent, and it's getting hit substantially as well. I'm not the biggest fan of Salesforce, but I mean, you had to say at some point enough is enough. And like they're valuing these companies as if the cash flow is about to dry up out of nowhere. So there's a possibility that that happens and that some of these, agent like OpenClaw and stuff like that are able to then create applications that deem these things meaningless and worthless. But I feel like it hasn't been the reality as of yet. So I think it's very crazy to think that on one hand, you're trying to reduce risk and be like risk off. But at the same time, you're thinking that SaaS is dead because of AI, which is a very risk on mentality. So it's like, what is it really, right? Are people moving their, and this is a question for you and the room. It's like, are we super hyper bullish, which is why SaaS is going to zero? And that's because the AI is just going to be so fruitful that it warrants a lot of these SaaS companies worthless? Or are we doing sector rotation because we're becoming risk off and moving into the value names that have been so unfavored over the past 5 years? I'm scratching my head because like both are happening, right? Or am I just being am I not reading the room and the tea leaves appropriately?
It's a good question, Matt. I mean, I think there's confusion. I don't think that. Here's the thing. I don't think that we're getting a big rotation. And I know there's a whole theory that when one side sells off, money has to go somewhere into other things. Okay. Who the hell is buying Coca-Cola here? Seriously. And I'm a shareholder of Coca-Cola. Who's buying Coca-Cola? Who's buying J&J? Who's buying Clorox? It's very hard for me to really wrap my brain around money moving into those types of companies. Now, Chevron, Exxon, absolutely. I think they're both great companies, and I can see money moving into there, good solid dividends, dividend growth. I still think they're both undervalued for the cash that they generate. But, the narrative about risk on versus risk off, in a risk off environment, where are you putting money? And do we really think that some of these old world companies are real opportunities? I don't know. And I don't think there's enough money going into REITs or energy infrastructure for that to be a narrative. So I'm at the same crossroad with you. I don't know, because it's hard to discount the profitability that these companies put up. And when you really look at the whole SaaS infrastructure, it's hard to believe that all these companies are going to zero. And it's hard to believe that they're trading where they are. Now, are there going to be companies in the software space that do go to zero? Absolutely. Is there going to be consolidation? Absolutely. But on an enterprise level, I still don't think the majority of people understand or have ever ran an RFP. And when you think about what goes into an RFP, when you think about the vetting process, when you think about actually making the decision to move into a software and then ripping and replacing the stuff that you were on and moving everything into it, and then running the full scale implementation, to then rip and replace it with something else that was built by AI. I mean, I don't know. I'm not seeing it, but I'm also on the other side because that's what I do. So I just don't see it happening.
Do you think that people are running to it because it's an obvious opportunity? And this is the thing that kind of confuses me. I could see if people were bidding some of these things down to 3% yields, but they're bidding them down to like low 2% yields. Like, we're not talking at this point something that and maybe people back off and that gets normalized and it goes back up to 3%. But I don't know. To me, it just seems like it's a little bit overdone. The sector rotation into some of those things.
Alan, why are you trying to freak me out saying there's a ghost in the background? So somebody brought something up, and it gives me, it's actually something I want to talk to you about. Maybe most people would be better just buying an ETF. Maybe most people would just be better off in the SPY or VOO. I don't think a lot of people can stomach these types of downturns or seeing companies go down 30%. You look at SPY, has that really done bad in 2026? Are people really down that much money? I mean, you're not going to freaking get the 10Xs in it, but you are going to benefit from every company that gets in and then them becoming the next big thing. And maybe more people need to take an index fund approach.
No, I don't disagree, Steve. I mean, I challenge people that all the time, right? Like, how much time do you want to dedicate? And
It's not even about how much time you want to dedicate. Are you willing to suffer through the pain? That's the biggest thing because we dedicate a lot of time. We're both of us have lost money in the past couple of weeks.
yeah, I'm down 18%.
So are you willing to suffer through the pain? Yes or no? Like that's what people should be asking. If they're not, buy an index fund. There's nothing wrong with it. You're going to do well over time.
Yeah. No, I mean, I agree with you wholly. I think I've even told people that tell me this exact. They say, I don't know enough, so I just put my money into the market and the S&P, and I just, let it go. And I tell them congratulations. And I don't say that sarcastically. I say that because I think it's very mature, and acknowledgement goes a long way when you recognize that you don't know something and you don't have the time to recognize or know something, the ebbs and flows. And I think it's very mature for some people to say, you know what, I just think that I'm better off just investing in the market. I don't know enough. I think it's very mature.
I mean, there's been a lot of great comments that we haven't gotten to, but one of them just now is people have trauma from 2022. Companies like Neo and Lucid were the next big thing and they never recovered. No shit. Like they're EV companies. I'm sorry, but why did we think were going to take over combustible engines? Because Tesla was cool? Like it didn't make sense. And I said this, I've said this so many times. I'm on record saying this on Seeking Alpha in at least 5 articles. If you, and this was my whole argument, and this is nothing against Tesla, if you're a parent buying a car for your teenager, are you getting them an EV? Probably not. Here's why. Where the hell are they going to plug it in if they go to college and when they're in high school? And then also, it's just not realistic to own an EV unless you live in a house. Where are you going to charge it? You live in an apartment building. Not every apartment building has chargers. You go away to school, where are you going to charge it? Like, until you have real solid state batteries or batteries that actually charge themselves when they're being used, I don't think you're going to get mass scale EV displacement of combustible engines. I mean, I forgot to get gas the other day. Okay. Drove into the city. I had 30 miles to go until Kaplooey. If I had an EV, what the hell would I do? Like, I had to drive it a good 15, 20 miles to get to the gas station.
Steven.
You can put gas in anywhere. Like, I don't know. I've never been a fan of the whole EV methodology. So, like, those types of companies, I never understood what the big picture of it was. I don't know. Maybe you can
I think
help
a lot
me.
of it. I think a lot of it was the government push. I don't disagree that Tesla had a very big piece in it. Tesla completely changed the auto industry. But I think a lot of it is very Western focused. We have the luxury to pay more in certain instances for what we believe is right, whether that's solar, wind, etc. And they have come down in price. So I'm not saying they're all mostly expensive, but we have the luxury of really good infrastructure comparatively to some of the rest of the world and united countries. If you go to South America, you go to Africa, you go to Asia, not all the countries play as well together as we do here on the Western side. Yeah, there's always some disgruntlements about the French and the English, etc. But they were still part of the EU together for quite some time before UK broke off. And while we give grief to our Canadian brother and Tanner and Tevis, they were just like us when they showed up in New York, right? You could barely tell that they're syrup blooded. So Steve's not paying attention.
I am paying attention.
What did I say, Steve?
Our European brethren. I'm listening.
No, you didn't hear my good joke about
Tevis and Tanner? Yes, I did.
What did I say, Steve?
I heard you.
What did I say?
I can't regurgitate, but I heard you.
Did you hear the fact that I said they had syrup for blood?
Syrup for what?
Syrup for blood.
For blood?
Yeah.
Is it maple? It better be maple.
I'm just giving you shit, but so I think we have a luxury to be able to share infrastructure as well as we do. I don't think the rest of the world does. And so it's easy for us to point the finger and say, thou shalt follow the 2015 Paris Agreement. And yeah, I mean, and try to follow.
Another thing that was ridiculous, but go on.
No, yeah, I mean, and so I think you're starting to see the windfall of that. And Germany has openly stated at the World Economic Forum that they made a mistake, and several others I think are starting to finally admit. So you've seen people spend billions of dollars upon billions of dollars into offshore wind that never panned out, and you're forcing companies to try to force something to happen, and the pendulum will swing again, right? Like we're swinging all the way back to oil, then eventually it's going to swing all the way back to EVs. And
I mean, I want to know what happened to global warming.
Steve, it's not warm in New York today.
This is the coldest winter that we've had in so freaking long.
Yeah. So I don't know. I'm not bearish against it. Somebody asked earlier, I forgot to get to this. This was a long time back, but asked about Enphase. I don't have an opinion now about Enphase. What I've always been very bearish about Enphase is that it was strictly residential. And I think it's very smart of them to move into commercial. My fear is, though, is that you already have a lot of players in the commercial space. So now they're just going to magically compete. It's going to take some time. So I don't know. Maybe they'll be able to make their way and hopefully they get market share, and fingers crossed for them. But I don't know enough to be fluent on it. But I'm at least glad that they're recognizing that the real movement is going to be in commercial solar, which I've been so discussing for such a long time. Put that on the utility companies to build out this large infrastructure. So much economies of scale to be able to build. I mean, granted, it's not as simple as one thinks, but so many economies of scale to having large solar arrays rather than individual home solar arrays. So anyway.
I mean, I think the big thing is how long it takes to actually charge an EV. It's not about, I don't know where the EV chargers are. There's not a single EV charger at any gas station I pull into. Not a single one.
Really?
Nope. Maybe I'm not actively looking.
What about the grocery stores you go to?
Now, that is true. There are some charging stations at some of the grocery stores I pull into. And at the mall, there is definitely a couple of chargers, but not in the gas stations. I don't know. I'm not seeing it. But I also didn't think that EVs were going to be big. But, I mean, I don't think 2022 was this overwhelming thing of pain. I think it was a multi-scale approach that hit the economy. You had many things happen. You had the supply chain. You had inflation. You had higher rates. You had the war, Ukraine, Russia. What do you think is going to happen? The market's going to go down. You had major things happen. You had oil go over 100. What do you think is going to happen? And it just goes back to my point. If you're in the S&P, you didn't really feel it compared to being in individual stocks. Okay, bear market went down 25%, but Amazon and Alphabet were down, what, 55, 60%? So you're talking about 100 grand invested in SPY. Maybe you're down to 70 or 75K. You had 100 grand invested in Amazon. At one point, you were down to freaking 40K. That's a big difference psychologically.
Steve, let's talk about something important.
Which is?
Let's say one were to come into some money right now.
Wait, one word to what?
One were to come into some money right now.
Okay.
What are we buying?
Mm.
Steve, you sleepy baby right now?
No, I'm thinking. Because the right answer is an
Uh,
S&P 500 index fund to me.
Is that just for normal people listening or for me or both?
No, but I'm just saying, you come into money, you should want to protect it, right?
Speaking of, I have some interesting thoughts off stream.
I'm just saying, coming into money is different than trying to make money, right? So
Very
you
different.
come into money, that makes me think you just got a life-changing amount of money.
No, I'm not talking
Which
about
could be
money.
different for everybody, but I'm thinking you want to try to protect that. But if you're trying to make money, I think there's plays.
Like what?
What do I know? I think Nvidia is cheap. I think Meta's cheap. I think Zeta's cheap. I mean, I think SoFi's cheap. So I don't know,
Is SoFi still around 20 or what? What's the deal?
19 or so.
19?
Yeah. You missed your bet by like a month and a half.
I know, right? I was thinking about that. Effing Tevis.
Damn
Call
Tevis.
Tevis. Call Tevis. See what he's doing.
Damn Tevis.
Don't actually. He's probably busy.
I hope he's busy.
I'm busy with you, Steve. Steve, can I ask a question without getting reprimanded?
Yes.
I want to see ones in the chat that if Steve and I were to get our Series 65, what would people think? Would they potentially want to be? And I'm not saying that everybody that puts a one in the chat will have the ability to invest along Steve or myself, but one in the chat if you would contemplate being part of a registered investment advisory if Steve and I were to start one, or some sort of shape. Steve might only do hedge fund. Maybe I only do a hedge fund. I don't know. Not enough people, Steve. I don't think we're doing it. I only see a couple ones.
That's okay.
Milkman ETF. What would be the Milkman ETF, Steve?
I mean, I was thinking about making one. So, you know how I have the dividend harvesting series?
Yeah.
I was thinking about doing a freaking beat the S&P series.
Exactly. That's the reason why we probably haven't done it yet. Why take on all the compliance? Exactly. %100% why we haven't already. But beat the S&P, huh?
Yeah. CQXO?
What's it up to, $30?
Nobody listens. Well, I shouldn't say that. A bunch of people in the chat listen.
Nobody listens to Steven.
Meet Kevin flopped because of the overexposure to Tesla. I mean, he was very clear about that.
He was it's tough, man, because I get it, because his portfolio blew up extensively.
And he had like some huge, like a 45%. They made him sell off some, and there was a whole bunch of shit that happened.
Yeah. Oh yeah, 100%. I don't know. Steve, what was about Nebius earnings? What did you think?
I haven't even looked at them yet.
Steven.
It was a busy day today.
Steven's a high flyer, everybody.
Busy day.
I'm surprised he even called me today.
Stop it.
Steve's So, Steve, what did you think of the? I think from what I've seen, I haven't watched the whole thing yet, but the Dan Ives interview went really, really well.
Oh, I thought it was phenomenal.
Really good conversation from what I've seen so far. I'm only a third of the way through. I can't wait to see the next 2/3.
It was awesome. I think what Dan says in the is very good. I think the last 2 minutes is incredible. The comments are certainly very bullish. So I'm excited. I think Dan was great. I think he was phenomenal. Josh was phenomenal. Dan was phenomenal. They were super nice. They were both. You can't say enough good things about both of them. So.
I'm excited for whoever shows up as number 3, 4, 5, 6, 7, 8.
There's gonna be some bangers, I can tell you that. Oh wow, it's already past 5,000 views in 3 hours.
Good, because when I clicked on it initially, it was like 389 views, and I'm like, what the hell? And then I was off and on finishing up stuff at the office, and so I didn't get to see. So I'm glad it's over 5K.
So this is the link to the video on Basis Points. And if you're not subscribed, please go subscribe. And if you haven't watched this, watch it. I think it was really good. The last 2 minutes you will die laughing. It was incredible. You know, we'll see what happens. There's a bunch of people that I want to try to get on. I told Amit who I would like to talk to. We'll see what happens.
You can tell people you want me on.
Well, we always want you on.
I'm just kidding, brother. But no, in all seriousness, like, I don't think you give yourself enough credit, Steve. Like, I think you have a very good, I mean, I have no doubt, right? Because you always come with facts. You always come with good numbers. But one of the things that I was most impressed about is your just continued work ethic, right? I mean, I know you had just come off a very serious situation at your 9 to 5, and doing the podcast, and then going back to your 9 to 5, and you still were able to deliver with such professionalism. You know, most people would be panicking, and you did absolutely phenomenal. So I don't know, and you have such a good voice for it, and professionalism, word choice. I don't think people give you enough credit. You'll be at 20,000 subscribers here on YouTube here very soon, and I wouldn't be surprised if Basis Points gets to 100,000 here very soon as well. I hope you guys, because it's a posted podcast rather than a live stream, I hope you reach a completely new plethora of audience members. And as we kind of have been talking about, as well as Dan talks about in the podcast, inspire a new generation of people. I think we've done a phenomenal job thus far. You know, obviously being associated with Amit, you, me, etc. We all have our individual networks, but
I mean, you're killing it,
Steven.
You're killing it. 100% success rating, 270% average return.
Steve, people like to hate, you know?
I'm just saying, you don't write about enough things to get the credit you deserve. You got to write about like 15 things.
But I've written Rocket Lab 3 times. Check that.
You have.
And now is actually a pretty decent time because things have pulled back a good bit.
You know.
And I will say I'm very fortunate that on that Palantir Hopium article that I wrote, I put neutral instead of sell.
Yeah. But yeah, you need to start writing more. That's all there is to it.
Wow, how am I climbing? I was like 1,000 last week.
Yeah.
Are you influencing people, Steve?
I mean, you're 772 in the financial blogging world, man.
I don't even write.
You don't even write.
I don't know. What am I gonna write on next, Steve?
I don't
Little,
know. I
little
think that's what everybody
BM&R?
needs to find out.
Little BM&R initiate
A little
coverage?
BM&R may not suck. You ready for where I am?
I wonder if you're
I
climbing
don't
or
know how this happened.
Steven.
I don't know how that happened. That will change at some point. It's
Well
100%
deserved.
going to change.
100% deserved.
So,
Can I ask a serious question? Has
yeah.
CNBC ever reached out to you? Why have you? And when I was literally thinking about that. I was like, they have Dan on. They obviously have Josh on. At what point are they going to get Steven on?
You know, you would think more people would reach out. I don't even know if people know what tip ranks is, but you know,
I mean, not just because of tip ranks, but just because of your plethora of knowledge across a multitude of subjects and industries.
yeah,
I
we'll
mean, I
see
think
what
you do a
happens.
phenomenal job.
I'll tell you what, I'd like to donate my time to Beast Industries. If they're going to do something serious for kids, I would donate my time. You don't have to pay me $1.
That's
I would
I would love to go on this show actually and talk about it as well.
I will donate my time to do stuff on the back end and stuff like that. So 100%.
Shout out Jimmy. Yeah. If anybody knows Jimmy wants to get Uncle Steve involved, I would also like to volunteer. You know, I don't mind going on all these shows free of charge.
Yeah.
Steve's more of a Bloomberg guy. Too intelligent to be on CNBC. Steve, you a rebuttal?
I mean,
You agree with the statement?
I don't really watch Bloomberg, to be honest with you.
I like the cast on CNBC. I think they do a good job.
I think CNBC does a better production. I think Bloomberg gets a rap as a more hardcore economics and finance because of the Asian markets and everything. I'll turn Bloomberg on if CNBC is not running. Otherwise, I have no need for Bloomberg. I don't know. I happen to like the people that I follow on CNBC, and I don't even get to watch CNBC a lot. Like all I'm watching are the clips on YouTube. I don't get to watch it during the day, so
I mean, shout out Bloomberg. They're the ones that put me on.
yeah, White House Quant, man.
I've seen on AP. I've seen on Bloomberg. I've seen on Stephen Fiorillo's channel.
I mean,
Are you up to
Bloomberg
14K yet, Steve? What's going on here?
14K what?
Subscribers.
I have no idea. No idea, my friend.
So what's the deal? You finishing up an article before you head to bed, or
You know, I'm definitely not writing another one. I can tell you that much. Probably gonna watch a little TV.
Steve? I'm slightly further along into billions.
Ooh. And what are you thinking?
I don't know where it's gonna go from here.
It's pretty freaking good, right?
Well, the first episode, I was just like, Steve lied to me and got me excited for nothing. And then the second episode, I'm like, what the fuck? So yeah, I'm a little bit interesting. And the predicament I have, Steve. So Billions is coming to an end, and I hope to watch another episode before
There's
I go to
no
sleep tonight.
predicament. I got the next show for you.
Well, I was about to ask, so what are we doing?
You want to stay in the finance realm or not? If you want to stay in the finance realm, just go start watching industry.
Well, that's my initial thought was that. And then at the same time, I was like, but there's so many other shows I need to catch up on. Is industry really the one?
Industry's really freaking good.
But I'm only on like season 2 of that.
It's only on season 3.
So I'm up to speed on Landman.
Landman was legit.
So I don't know.
All right. Well, I think we're gonna call it. Been on for an hour 40. It's 10:40.
I gotta still do some office work, Steve.
Okay.
I got lost, but I do want to chat with you about something I might be working on over the next couple weeks.
All right, sounds good. So, all right, everyone, please go follow Matt. Please go follow Basis Points. If you haven't seen the Dan Ives interview, it is phenomenal. I think the studio looks better that they rearranged it in the background. It looks much lighter. I think it looks good. And yeah, we'll be on over the weekend. It's a long weekend. I'll be on Friday night. I'll be on Saturday night. Sunday's going to be iffy. So I may bring my laptop with me where I'm going. And Matt and I may do our Sunday stream and I may be at a different location. Or we'll do it Saturday. I don't know. We'll see. And then I'm going to do something on Monday. So I'm trying to stream all weekend, 1 or 2 streams a day. You have any plans this weekend, Matt?
Nothing planned as of yet, but you got me inspired. Maybe depending on what's going on, I've thought about going on like a little cabin extravaganza.
Okay, let's not say we did.
You don't have to come.
I'm just saying, like, you can stay home and write.
Who's to say I won't bring cigars and write up a storm while I'm wherever I'm at?
You know, I think you can smoke cigars where you are.
I think it's probably unlikely that I'll move to a different location and start writing, but that's just me.
I think it's very hard to write on a laptop. I can't do it.
Why they pay the big bucks, Steve?
Anyway.
Well, good luck. And yes, let's do some streams this weekend.
Sounds good. Matt and I will be doing some streams this weekend. Please go follow Matt. Please follow Basis Points. And we will see everybody over the weekend.
Thank you all. It's been a blast.
Have a great night, everyone.
As Tanner says, bye for now.